And the end of the music means it is time for another edition of Trade Masters. One of my favorite hours of the week. Seriously, this has been a very fun show for me to do over the past several months, and has been a very profitable as two experienced traders come and bring me picks to make some money on. And the picks have been outstanding for months now. The analysis has been great. This is a really just a must take the time to watch this. And then you can take the picks, bring them home, analyze them, see what you want to do. But it has been a great, profitable, fun time. And with me tonight, we have a newcomer, but we have the defending champ, Tyler Craig. How are you doing tonight, Tyler?
I'm feeling frosty. All right, it's going down, Jake. Jake's a buddy of mine, and little does he know he's stumbling into a lion's den here. So, but he's scrappy, and I think he's going to do great. So I'm excited for a battle.
Jake, and I've been very excited when I found out Jake Lamar, very well respected in the tackle trading community. Jake, very excited to have you on to get your perspective on things. And listen, we had a big day in the market, right? I think, let me recap the Fed meeting today. I think Jay Powell got up there and said, money printer goes brr. I think that's what he said today. And market didn't hate what they had to say. How you doing, Jake? Are you ready for the challenge of Tyler Craig?
Yeah, he says Lion's Den. I'm wondering if it's the kiddie pool, but we're going to really find out here today. I'm excited. I absolutely love Tyler. I love being on here. Let's have some fun.
Listen, and feel free to trash talk throughout. Tyler, let's get to work. Let's get to work. Tyler, as defending champ, you get to decide who goes first.
I'll go first. I'll show him how it's done.
All right.
So last week, my theme was diversification. I took 5 picks from 5 different areas of the market. I'm going to do something similar today. I told Mark in the pre-show, I have no shortage of ideas here. I think this would have been a different discussion had the Fed announcement, tanked the market or something. But it's game on for bulls, and there are plenty of charts to choose from. So I'm going to start with commodities. I'm going to start with commodities. One of the things that you saw today.
Just let me, you might be saying it. You go ahead, because you're probably going to say exactly what I saw today.
Perhaps. I have been here before, Marky. You just sit back, relax. It's going to be fine. It's going to be fine. In response to the Fed essentially saying, settle down. We've told you a million times, interest rates are going to be zero forever. So just chill out. US dollar got wackadoodled here. Saw a pretty large drop in the dollar, which is bullish for commodities. So you have a little bit of a tailwind with the weakening dollar today. But this is also a theme that we've seen with the economy reopening, inflation expectations heating up, commodity related areas have done very, very well. So you take a look at XME, which is my preferred ETF for tracking metal and mining. This has been hot, had a nice little pullback this week. We've had steel stocks on our reports quite a bit lately, Nucor, copper stocks, FCX. So I wanted to look in the basic material space and see if there was something that I could do without having to chase the Nucors of the world, which are just up quite a bit. So I came across DuPont. Mark, and I like this setup for a couple of reasons. Okay, first of all, if you look at the weekly chart, take a look at a 5-year weekly, you can see the ascent we've seen off of the March lows.
Look at that bounce off the 20 weekly.
I know what you like, buddy. Don't you, it's coming to you. 28 to 90, okay, tripled in value, got a little ahead of itself, so had a weekly bull retracement, popped off the 20. That could have provided a nice little entry. We just got back above the 200-week moving average. And when you look at the daily chart, I see a nice little cup. I see a nice little handle. Volume's been non-existent for the last few days. And today you get this nice breakout candle, clears the base, clears the left side of the cup as well. I think DuPont carries higher with the rest of the commodity space, ultimately goes up back to 87 and beyond. Implied volatility is really low. Options are relatively cheap. I would be doing a bull call spread here. I would buy the 80 call. I would sell the 85. You do that out to April, you got a really good risk reward. I don't think I would go out, May, June, July. I don't think you need to go out that far. I would just trade this as a nice little swing trade with a bull call. Numbers are compelling. You go to April, you got 30 days. That 80 call is dirt cheap. Buy that, buy the 80, sell the 85. You're paying $1 for a $5 spread, risking $1 to make $4. I don't really need a stop loss with that cheap of a trade. If you want to use one, you can put it below the base. 85 is a bit lofty on the target, but I think you can get there if these commodities run. Look at the first of the year as an example of what obviously I'd like to see. All in all, good risk reward, great setup, and I like the theme here of commodities continuing to be strong.
And we go back to the weekly chart real quick. I mean, textbook perfect. I love this a lot. I love the second go around at the 200 weekly. I hate the first one when it runs into it. This is a pattern I love. You see very often. You see that try to stretch, come back down, second go. I love the second go. I love this trade. Like everything about it, absolutely perfect. You did, in fact, let Jake know what he's up against tonight.
I'm curious though, were you going to mention weak dollar stuff, or what were you going to mention earlier?
Well, I was just going to say, like, the whole inflationary theme. I mean, basically, Jay Powell got up there today, and not a surprise to a lot of people. I mean, he basically said, we're going to let inflation run hot. And, while he didn't say this verbatim, he said, we'll worry about inflation and deal with it when it becomes a problem, and we're going to let it run hot till then. That was the message. Anything that any inflation trade you had, position styles or long term, that thing's on. So short term, long term, inflationary type trades definitely on. Jake, round one, sir. What do you got for us?
All right, so let's see. You're going directional trade. I'll meet you. I'll meet you where you're at. Let's try bookings. Kind of breaking out today. We had a long-term bullish uptrend, kind of consolidated for a while, right? Kind of hitting that all-time high today after it kind of based for a while, looking for a small, like little move up to the 2600 is kind of what I was toying with, if you will. Doing a long call horizontal, probably selling 23 days, buying the 30-day contracts on the $2,600 mark. Looking for, in a couple weeks, decent return on capital, probably 25% plus return on capital over a 2-week trade.
All right, so we got a reopening type play. They've been doing very, very well. They should have continued sentiment, right? So anything in the reopening, anything in travel, hospitality, that's a preferred area of the market. Beautiful technical setup. We go out. Let's build this trade out. See what it looks like.
Can I just add one thing? I love this setup. We had Expedia. Goes along with the same narrative, the same thing, right? We had Expedia on the reports. This one's great. And for those that don't know, Booking bought Priceline, right? So that's where essentially Priceline is a big piece of this.
Yeah, no, I mean, this is the whole hospitality space. I mean, that's the play, right? Let's build this trade out, see what it looks like.
So I was looking to sell the 23-day contract, the $2,600 mark. What I was thinking when I saw this was high price stock, low volatility environment, but bullish trade. So my go-to was something that was positive Vega, positive Delta, and ideally positive Theta. And this is kind of what I was thinking for. So I got that 23-day 2,600 sold. Buying that $2,600, probably for $1,000, $1,100, all into that trade. Exactly. Beautiful. And I
got a few thoughts on this.
Short timeline.
All right, let me hear everything.
Go. Sorry, Jake. Keep going.
Well, I just wanted to say the short timeline, just so that my biggest struggle with call calendars is that when they run up to your projected target way too quickly, right? So this one, hey, you still get $240 return on $1,000 investment, even if it hits it tomorrow. It gives you enough that it justifies it, but gives the trade enough time to work. Was my thought process.
All right, what's your thoughts on it, Tyler?
I like it. So what I like the thought process that says it is an expensive stock. Options are cheap. I'm sure as heck not going to buy a call option because they're ridiculously expensive. So let me do a call spread instead. Well done, Jake. Horizontals very cheap. Love it. So what makes you do horizontal over bull call spread, bull call vertical?
Probably just preference
Okay.
at this point. You know, I'm very comfortable in my own trading just to risk $1,000, and the way I trade long call horizontals is I'm willing to risk that. So I just kind of do position size off a total loss per contract and can run with that. So I was comfortable there. I'm guessing the price point's going to be a little bit more if I do the vertical.
All right. So I mean, and if someone, I mean, if $1,000 was over somebody's personal threshold, I mean, you can buy just a couple shares, right, and get a couple move. I mean, so like, I mean, we get so trapped as traders thinking I got to do things in 100-share blocks. I got to do things in spread. If you love the setup, if you love the area it's in, if you like your trigger, then just buying shares. Even if it's 1, 2, 3, 4, 5, 10. I mean, whatever it is. I mean, there's still money to be made, right? There's still money to be made. Technical signal, entry signal. We cleared resistance today, so above the high.
Yep, that would be my trigger. Would be probably above today's high on a candle tomorrow, but just at current market value.
Now, what if you get a messy gap tomorrow? How would you play a messy gap? So if you get a smooth entry above the high, but let's say you get a nasty gap up.
Nasty gap up, I'm gonna feel like I missed it. I hate that when I trade. I'm probably gonna sit on it for the first 5-10 minutes of the market open and watch how things shake out, and hopefully see some relief into sliding price action in the first couple minutes. Otherwise, I might contemplate just skipping that trade and moving on to the next one.
Listen, it's a great trade. It really is. It's a great setup. It's a great area. Right, one of the right areas of the market. The technical setup's beautiful.
It's pretty.
Yeah, I mean, yeah. It's just so now it's just a question of how you play it. I love it. Absolutely love it. All right, Tyler, round 2. Let's do this.
All right, round 2. Let's go to energy. Let's go to energy. So crude oil has a nice little constructive, I don't know, 4-bar pullback, 4 red bars sitting right at the 20, sitting at old resistance, new support. I like the consolidation in energy. I think it's giving you an opportunity in some of the energy stocks. So if you were to break down every sector chart right now, XLE would be top of the list from a cleanliness perspective. So we have a nice little bull retracement going on in energy. The XLE chart looks great. XOP looks fine. So you could throw a dart at your watch list if you have isolated the energy sector. Throw a dart. You'll find bull retracements across the board. So for me, I struggled in narrowing down the list because there were quite a few. But I went ahead and chose ConocoPhillips. COP. I like this for a couple of reasons. I like the depth of the retracement. I like how it came back to old resistance, potentially forming new support here. I like the bullish reversal candle today. And ultimately, I just like the space and I like the trend. And quite honestly, I don't know that you have to worry as much about which one you picked as much as just being in the right sector, quite honestly. So me personally, I'd probably take XLE or XOP, but on the individual stock front to make it more spicy, I like ConocoPhillips here. Trigger would be over today's high. First target, 61. Second target, probably 65. So there's kind of your step system, stop entry target guidelines. From a strategy perspective, it's a $55 stock. It's relatively cheap. Options, the theme of cheap options is going to continue throughout today's discussion because that's just the reality. So I don't think I'd fiddle with selling puts. I'd probably just do a bull call spread if you like to buy the dip here. And I'm thinking, I don't know that I want to go overly aggressive on this in case oil just kind of chops. So Mark, I'm thinking of buying the 55 call, selling the 60, probably out to April, actually. And then if you take a look here, we'll go ahead and build it. You could do April, May. Just remember on these vertical spreads,
Will you
longer
give me
terms,
prices on both?
Yeah, longer term is more conservative. Takes longer to make your money, but you don't lose your money as fast if you're wrong. Shorter term, you get a little bit quicker resolution, so it's more aggressive. That trade for March, or excuse me, May is going to cost you 218. You build the same call spread for April, buy this 55, sell the 60. Prices are almost identical. The difference is going to be the speed. So you will hit your target quicker in April. You'll also incur loss quicker. So more of a less of a price difference, more of a preference in terms of the speed of how you want the trade.
Yeah, I was wondering if the prices would be similar. I was very curious about that.
With when you do an at the money debit spread, when you're in the middle of the strikes, the odds are almost identical. You know, when you go further out in time, it's 50-50. Whether you say, is Conoco going to be up or down tomorrow, or is it going to be up or down in a month? I mean, the way the options are priced are 50-50. So if the odds are the same, you would think the payoff should be the same. And in fact, it is. It's just a matter of how long you want to wait to get the payoff or potentially incur the loss. So for me, that would just be more of a aggressive would take the April trade. The more conservative would be May. Either way, I like them both. I think it's a nice conservative way to play it if you think this dip in Conoco gets bought.
Listen, I mean, we've been talking about energy at tackle trading strongly, 5-6 weeks now. It's been a good little run. They're reopening, vaccinations, COVID cases going down, OPEC being very, very friendly towards production numbers, Jay Powell saying inflation. I mean, all of the things are there, and you get a nice little pullback in that environment. Man, like Tyler said, throw a dart, find your favorite instrument, but it is a very nice situation. Matt talked more of this. Well, beautiful pick. All right, Jake. All right, let's see what you got. Round two.
Okay. Well, there were a lot of energy picks, so why don't I do something for the viewers? So let's stay with the thesis of oil. Let's try RIG, R-I-G. Super cheap.
Don't you love how Jake went from a $2,500 stock down to a $4 stock?
Yeah, exactly. Yeah,
there you go.
Trade anything if it has a price.
You trade anything.
100%. So super cheap. I agree with Tyler. Based on the volatility in the market, your preference should probably lean towards, I'd say, long options over short. But what I was thinking was doing just close to an at the money naked put 30 days out, selling the $4, which happened to be a price level that seems to be holding, has been a price level of importance throughout history over the last couple of years. Just selling a good clean 40-37 delta, close to at the money 30-day option to get about 10% return on invested capital over 30 days.
No, I mean, go out there. I mean, Jake, you and I have not talked about. This is basically the kind of stuff I've been doing all year long. Cheap stock, high volatility. I mean, the option volatility chain may be low elsewhere, but down here in trash that makes cash land, it's running high. We go look at those April options. Now, Rick go ahead.
Real quick on the volatility, this is a good point. Sometimes the IV percentile or IV rank is misleading. When you look at because the IV rank is a relative number, the implied vol is an absolute number. Rig trades, its absolute implied volatility on average is 104%, which is like 5x what the S&P 500 is. So it doesn't matter that the IV rank is 1%. This thing always trades with a high IV, so there's always premium to be sold, just in case that IV rank was throwing people off. But yeah, I'll build the trademark. But what were you saying?
No, I mean, so this is an area. I mean, this is what I do these days is basically cheap stocks, stuff under $15, and I just smash these volatility numbers while I have them, and they're really great independently. They're superb if you have an area or a company that you're willing to boomerang and cost average down on. You can create some really, really nice cash flow systems on something like Rig, where, hey, if you get a put, take ownership, sell calls, buy more if it goes lower, selling puts, and you can create a really nice little cash flow part of your portfolio. I gotta like the company, gotta like the space, gotta be willing to do it. But I've been doing this on rig actually myself lately. So talk about that $4 option. What's my rate of return?
Yeah, so you're selling this, right, Jake? The 4 strike for April?
Yeah.
Oh, what did you say the ROI was? You underplayed it, man. This is juicy.
He was doing on total capital deployed.
You look, you want return on initial margin, 61%.
Yeah, it's not too, I mean, I love this area of the market. I do. Yeah, you don't do it blindly. You find things that you think are going to hold up for a while. But yeah, good return. I've been doing it on our regular. I mean, you're in brownie bonus points for me.
Ayo. Yeah, and who's the judge again? Is Mark the judge?
Yes.
Oh, ayo, there we go. Right.
Started with penny stock. All right. Well done. Listen, I like it. I like on a rig. I do it myself. I'm glad you shared that with the viewers there. And once again, like, and you get put in the stock, you start take ownership, sell calls, rinse and repeat. It's a nice little cash flow part of your portfolio.
It's a good pullback too. This is one of the better
and the
looking
technical,
ones in the
we didn't even talk about it. You know, once again, oil has a lot of these good, technical pullbacks. So,
yep.
Well done. I don't care what you brought in round 2. Jake was going to beat you that round, Tyler. I mean, that's just my trash that makes cash sentiment sell put on that.
It's all good. It's all good.
All right, round 3. Let's do it. Tyler, you're up.
All right. Okay. We've talked commodities. We've talked energy. We're going to go to financials, financial sector. So the theme here has been rising long-term rates increase the profitability of banks as well as an improving economy, right? Which, don't you feel like that's a throwaway at this point, Mark? You could say anything because of an improving economy, I think. But there are certain areas that are more sensitive to that, right? And certainly banks and financials are one of those. So one of the things that we've seen this week with the pullback in energy, that has been echoed by a pullback in financials. Maybe not as picture perfect, but you have seen financials back off a little bit. And that has given you a backdrop where some good financial stock charts had the ability to pull back a few bars, right? So I'm shopping the financial space. I like banks. They're in a good secular uptrend here. And so Berkshire Hathaway, we've actually had this on the report, on the options report, and we've had it on the Trade Masters multiple times. I think Coach Greg has brought it up a few times, but check this out, Mark. Okay, you got a lovely uptrend, very nice increasing momentum after they killed it on earnings. Which, hey, if you want to cherry pick just 4 quarterly reports, how about, oh, we lost $20, sorry. No, we made 10, actually 12, actually 15. Nice little trend going on here in their quarterly earnings. No wonder their stock price has recovered. But I really like the momentum up after this latest earnings announcement. I like the separation of the 20-day and the 50-day moving average. And I like pullbacks after increasing momentum. And the pullback's been pretty textbook. You got lower volume on the retracement than you had on the rally. Got a nice little touch of the 20 MA, little doji candle today. Didn't really participate in the rally after the Fed meeting, but financials didn't either. They just ended with a doji. I wouldn't even mind if this pulled back a few more days if it wanted to, but I think this has got to be a dip that you buy. Potential trigger right now would be over today's high. As for the stop, depends on how you're going to trade it strategy-wise. But if you put a stop under the pivot low, you got a really good risk reward here if it targets the prior high. So just a textbook, classic little bull retracement in a strong sector. From a strategy perspective, they don't pay you much to sell options. I mean, in contrast to RIG, which had 100+% implied vol, this has about a 22% implied volatility. So completely different type of trade here. I would probably stick with the bull call spread. This is at $250. I like buying the 260 call and selling the 270 out to April or May. I think that's a nice, easy way of playing this retracement. $10 spread, probably going to cost you $3.50 to $4 would be my guess. And did I say 260, 270?
You said 262.
Okay,
No.
scratch that. I don't want to go that far. Let's go 255. 255, 260 is actually good enough. They're not pricing in a lot of movement in this
Oh,
thing.
wow.
You don't need to go far out. So,
And go, and will you do the May check again as well?
I will. Yeah, I think 255, 260 is what I would go. And if I did May, what I would do is I would duplicate and then change the month to May. That can't be right. 75 cents don't make no sense. The bid-ask spreads on that must be wide. Bid-ask spreads are jacking it up. It's not giving you an accurate number. It's not going to be cheaper. It's not going to be cheaper. It will be more expensive. So even still, it's got to be $2 or less. So you're paying $1.68 for the $5 wide for April. I'm guessing you'd pay, I don't know, $1.88, $2, somewhere around there for May.
No, and listen, this is the third time we brought up Berkshire on Trade Masters, and this has all the makings of going for 3 for 3 on winning trades.
Dude,
So,
if it ain't broke.
like, you know, in Berkshire, in their diversified holdings, they all obviously have exposure to the financial, but they have a lot of things exposed to the general economy reopening, you know, railroads and such. So, I mean, they're built big, huge, diversified company with a lot of the right pieces. Beautiful. I mean, great earnings report, great pullback. Bounced off my girlfriend, the 9 on the weekly chart to the penny, which shows me there's no real fear.
Yep.
Beautiful trade. Beautiful trade. It's just how do you want to play it, right? I mean, that's if you wanted to play this longer term, it's giving you a great entry. If you wanted to play this short term, it's giving you a good technical setup. Lots of ways to play this. It's a good signal, though. It's a good signal. Well done, as normal. Hey, listen, these are 5 great picks so far. Can you deliver us number 6, Jake?
We'll see. All right, so I'm gonna switch things up. I'm gonna throw FedEx on the board.
I like Jake already because Jake is just like $2,600 stock, $5 stock. I mean, you don't know what his next pick's going to be.
No, and this one I'm actually trying to do an earnings trade. So what we're trying to do is a nice little 1-day trade, right? Earnings after the market tomorrow, I believe.
Yep.
So I'm trying to do a short strangle. So when I was prepping this trade, looking at FedEx in the past over the last 4 earnings announcements.
Could we just take 2 minutes to break down? Because I'm sure a lot of people have no idea what a short strangle is. Can you get out a notepad, Tyler?
Sure.
To write on, and just give a 90-second overview of what a short strangle is, the mechanics of it, and just why somebody does it. Very advanced trade. If you're new, do not try this, but good education. You can always paper trade everything, right?
Yeah, Jake, that's you, man. I'm your hands. You tell me what is a short strangle?
Okay, a short strangle. We're combining 2 separate trades. We're combining what many people refer to as a naked put or a short put, selling of a singular put option, with a short call or selling a call. We're adding those 2 pieces together. They're the short legs of another trade that many people might be familiar with called an iron condor. But this is a trade where you're selling 2 separate options. One where you want the price to stay above the put strike, and one where you want the price to stay below the call strike, and you're essentially trying to get it to meander in the middle, if you will, right? It's a very neutral trade. We'll put it in the Delta Neutral Strategy book, and it's one where it is theta positive. So we make money due to time passing. Specifically in this earnings situation, I'm trying to take advantage of a possible minor. I don't think it's going to be major. I modeled out like a 5% decrease in implied volatility, but just a small crush on a volatility that might lead to some profit in these options if it doesn't move too much. So again, trying to keep it in between these 2 levels. Volatility should subside after the unknown information becomes known. Maybe help us in this trade, maybe not. But it again is a trade where the risk is outside of the parameters we sell and profit is within.
All right, and obviously you can get hurt bad if you have a big gap up and run. So I mean, if you don't have experience, sit this one out at home, paper trade it. But I know a lot of traders. I remember my brother Tim. He used to love this kind of stuff. I mean, this is what he did. This is what he's drawn to. I mean, volatility trading around earnings. All right, guys, show me some strike prices. What strike prices are we looking at?
So when I was doing my modeling, I found that FedEx had a tendency to gap anywhere between 10 to 30. Like one of them was like a 30% gap for the last couple ones. Sometimes it was 0. Sometimes it was like 8. What I modeled, what my personal expectation is a 15%. So I wanted to kind of keep my break evens on the trade in general at about those levels. So 15% of about 165 or 265 is going to be about $40. So I wanted my high strike to be above 305 and I wanted my low strike to be below 225 in building out this trade. The market maker move expectation on this is $15. So this is far outside of what the market is expecting, but based on the history of how this stock does have a tendency to gap during earnings, I felt far more comfortable keeping my levels about that distance. So if we went into the trade tab, I went to the 30-day options, just the most recent, the next monthly cycle expiration. I think on the low side, I went 220 because that was just outside the 225 mark. I'm selling that one. That's a 7 delta, if you will. And then combining that with what I think would be the 310, because again, they don't have the $5 strikes. Just kind of keeping it outside of those $40 price ranges. And based on the modeling that I saw, if we were to see a 5% decrease in implied volatility, that should put my break evens on this trade about $15 from where they currently are, which is the market maker move. So if we move the market maker move and volatility compresses in a way that's, I believe, relatively expected, I should be okay as long as what happens, if less of a move happens, should make a little bit of profit. If more of a move happens, okay, I can kind of massage this type of trade because it's a naked option spread. I can roll up one side, roll down. There's a lot of mechanics I can deploy to defend if need be, but just looking for a quick, maybe anywhere between 1 to 2% on my money in a day, and I'm out, ideally.
Yeah. Okay. Gotcha. I mean, advanced trade. I mean, Jake, how old are you?
25.
And how long have you been trading?
5 years. It feels like forever.
Listen, and I know, listen, and you don't ever have to get anywhere near the level of in depth Jay gets to become a winning trader, but it just shows you that, you start, were you this smart 5 years ago when it came to trading?
Smarter. No,
Oh.
I have no idea.
Baby.
Yeah. No, I learned from Tyler. Tyler was one of my mentors, so I give him a little credit. Not a lot, but a little. I give him a little.
Well, and if somebody wanted to do this, Jake, but they didn't want the unlimited risk, or maybe they can't sell naked options, could they do a Condor instead?
For sure. Yeah. I don't know if it's taking advantage of the same vol crush just because you have the long options in the mix.
Yeah, the vol crush is missing the. Yeah.
But still, though, you buy the next leg on both sides,
bad.
you're still getting $1.20 on $10 spread, right? So you could still make it.
For sure.
I mean, the numbers still work. So yeah, it's great.
I love the analysis. I do. It was like I felt like I was in a class, and I loved it. Well done, Tyler. Round 4.
You know what? When he brought this up, I'm like, dude, tell me he did not bring up a directional trade with the stock that's got earnings coming in tomorrow. What did he forget everything I taught him? And then
right?
He comes out with a short strangle, and well done. Okay, round 4, right?
Round 4. Let's do this.
Okay, do you know who's been hot lately? Like hot. I know everything we've talked about has been hot, but how about industrials? Okay, Dow Jones Industrial Average. Tired of being the I don't know, the old fogey of the market waking up here recently. Dow stocks, industrial stocks have been really good. Just kind of the complete opposite of tech, quite honestly. So I wanted something in the industrial space, did some scanning, and I'm just going to bring up, this is a stock that we had in our report. Finally triggered today, and it's pretty. Okay, it's pretty. It's tough.
One.
It's tough to build a trade on the Dow because it's up so many days. How about international paper, IP? You got a lovely little pullback right to old resistance, new support, rising 20-day moving average. You look at the last 3 bars. What it means when you have these lower wicks or these bottoming tails is you've had buyers show up intraday. We sell off, they push it back up. We sell off, they push it back up. And then today, they're like, dude, we're done screwing around. Like, we're going to jam this higher all day and close at the high. Pretty compelling candle today. And as far as bull retracements go, this also was preceded by a big rally on increasing momentum. So you could print this out, put it on your fridge. It's a textbook bull retracement. You could have already entered the thing today if you were watching our reports. If you didn't, I think you can get a secondary trigger over today's high. Nice little stop below the pivot low. $57 is the obvious first target. Beyond that, I'd go for $60. Nice little bull retracement in a hot sector. That's the pattern. If I wanted to look at the weekly chart, this is honestly a little messy on the weekly chart. The saving grace is it really hasn't mattered. I mean, they're pushing these higher regardless of some longer time frames, but it is above all the junk on the weekly chart. So also there isn't much by way of resistance until you get up to about $59-60. So I don't think that's going to adversely impact the daily setup. Strategy wise, options are cheap. IV rank is 1. Absolute vol at 31% is cheap. Again, I hate to be a broken record here, but I feel like bull call spreads are the way to go. Keep in mind, if you really want to go for the gusto, you could just do a long call or buy the stock for that matter. But Mark, I like on IP just buying the 55 call, sell the 57.50. You can actually get some pretty good numbers on that. Again, I don't know why they're pricing these so cheap. They apparently just don't think this will go up that much the next 30 days. But you take a look at these April options. First of all, just the 55 call is trading for like $1.40. That's cheap on a $55 stock. And if you want to offset the risk by a third, sell the 57.50.
Well, I mean, I think we're seeing, once again, VIX went below 20 for the first time I've seen in forever. It seems like. I mean, you've seen volatility drop everywhere.
Yeah.
I don't know if it's a force drop. I don't know what it is, but it has definitely made buying options the cheapest it's been since the pandemic started, right? Like collectively across the board.
Yeah, and it's interesting. What it does is it gives you more compelling risk reward, right? Like normally you couldn't buy like an at the money call and sell the first strike out of the money, do a $2.50 spread and only pay 88 cents. And so it translates into very low risk versus high reward, and it just makes call spreads a more compelling way of trading these setups. So you could go out to May if you want a little more time. Actually, it doesn't have May. You have to go to June. But the nice thing about it being so cheap is you don't have to worry about whipsaw. It's like, come on, 57.50 is not that far away. It's not that far away. Your break even on this is around 55.88. We're not asking much here. It just has to go up 2 ATRs, and you're at your higher strike. So I like the numbers. I think they bear out the idea, and it's compelling. I mean, you can
right area, right setup. I mean, that technical setup you saw in IP, I think you're gonna see in oil, that chart, that up candle, on a lot of charts. Beautiful setup, right area. The risk reward, it shocks me to see the risk reward that low on the trade. Old resistance acting as new support, rising 20, checks all the boxes. All right, loved all 7. It's your job, Jake, to deliver number 8.
All right. Well, I'm trying to use different styles of trading every single time. So let's go with Ford.
Jake feels like the ice figure skater who is trying to do the triple sow cow degree of difficulty.
Yep.
It's not a bad strategy. Not a bad strategy.
Yeah,
Not
well,
bad.
just especially meeting our audience where they're at, right? So people, I don't know where the people's, everybody has different levels of capital, different styles of trading. So good ideas for the future.
Yep.
So I saw this hitting an old $12 level that had importance all the way back 5 years ago, kind of sitting off of that, bouncing off that nice little moving average there today. Looking to just do a cheap covered call. No, I'm not doing anything fancy, super complicated here. I'm talking buying at market, selling a $14 30-day call option. You're slightly just above resistance. If we meander, cool. If we run, even better. But a nice, just kind of cheap way to get some long market exposure with a little bit of theta mixed in the mix.
No, I mean, let's go look at those April premiums, all right? So get a little bit, and I love Ford. I mean, I love it for a position trade. I got a lot of exposure to Ford. I just love it's in the right area, right? Value, and it's going to have 100 million EV headlines this year. So if it goes down, I'm willing to own it, continue to sell covered calls. That's just me personally. But Ford's one of those position type trades I have for this year. So we get 35, 34 bucks, upward movement, bouncing off the 20, right area. I knew that this was going to be a very close match, knowing the two individuals. And I knew I was going to have some great picks. But we got one round left. So whatever you got, give me the best you got left.
Oh, I have a lot left. By the way, Jake, Ford was on my list. Good pick. Good
IP
pick.
was on my list. Good pick.
Wow.
This is the this is the opposite of trash talking. This is, oh, you are a fine gentleman, sir. Oh, no, you are a fine gentleman, sir. Not exactly some world class picks and analysis. Not exactly world class trash talking.
You should have heard Jake before the call. Okay, he's being
Oh
PG.
yeah, I was giving it to him. Yeah, I told him to get ready. Yeah.
All right, I'm going to. I had a retail play. I'm passing on that. I had a trash for cash play. I'm passing on that.
Which one? Just out of curiosity.
Dick's Sporting Goods.
Dick's for Sporting Goods isn't that trash for cash?
Oh, well, I said two things. Retail. You want the trash for cash?
Yeah.
The Tilray. You can go pretty far to money sell naked puts on Tilray right now.
Yeah, you can. I might do that tomorrow.
All right. I'm going to go with tech. Okay.
Okay.
I'm going to paint a bullish scenario for tech for you. How about this? We've been waiting for tech to get its act together. And by get its act together, I mean to start acting more bullish from a technical analysis perspective, because screw the headlines. The price tells me what I need to know. And if you go before the last couple of trading sessions, not that I knew exactly what was going to happen, but thesis one, the bounce in tech gets stuffed and it rolls over. Okay. And then you continue bearish tech. Path two, we chop up near the upper end of the bounce, which is constructive. You work through overhead resistance at the 50-day moving average. I'm on the NASDAQ, by the way, QQQ. You digest the overhead resistance and then you work your way higher. What I think you have to be increasingly open to is that eventuality. This thing has held up quite well. It did not roll over. First, it took out the 20, then it fell, faltered at the 50. Today, we closed above the 50-day moving average, and we are right at old resistance. If the NASDAQ goes above today's high, this will be the first time we've broken above a prior resistance zone since this whole correction started. That's a change in character. When you look at this close, this is an inverted head and shoulders pattern. You got a left shoulder, you got a head, you got a right shoulder, and now I'm just waiting for the breakout. And I think everybody jumps back in the pool. They come back to tech. They say sorry. All right, like the boyfriend who broke up, crawling back. Right. Yeah. I like the volume today. I like the high volume on the bullish engulfing candle. Look, from a technical analysis perspective, I think NASDAQ is a buy over 324.50. So with that, there's a few tech stocks that I find interesting: Google, PayPal, Box. But I like just not overthinking this and doing a bull trade on the Qs. Doing a bull trade on the Qs. I think this runs back to its highs because that's what the rest of the market's done. I think this eventually plays catch up. Obviously, the cleanest path would be if it breaks out tomorrow and just rips. Maybe it'll take a little longer, but I think that you can use a stop if this rolls over, get out quick. And if it does trigger, I think you got a good path up to 340. I would do another bull call spread. I would buy the 325. I'd sell the 335 or sell the 340, something like that, 1 or 2 months out. I think is a nice way of playing tech, making a comeback.
But it's prerequisite on them breaking the resistance level to make that just crystal clear.
Yes. Yeah. To be clear, you've got to break above 324.50. 324.50. You break above that, then it's go time. If this just keeps chopping sideways, I still think it's inevitable. It just may take a little longer. But certainly if we gap down tomorrow and take out today's low, forget it. Forget it.
So if for some reason, like, so if it takes several days to happen, that's fine. But if you break the recent low, or I mean, we're looking at a whole different set of analysis, right?
Yeah. If you break 311, forget it. Forget it.
Because the inverse head and shoulders pattern is nullified. We got a whole new set of whatever.
Yep. Yeah.
Gotcha.
And that's the beautiful thing about patterns, right? If it breaks here, then I buy. If it doesn't, then I don't buy. It's a forming pattern, and the way charts work is one pattern morphs to another, which morphs to another until you get resolution. But I'm feeling optimistic after today. I think it will break sooner than later.
Because that resistance level is so clear, everybody can see it. So everybody's looking at the same thing. Yeah. So a little self-fulfilling prophecy if it breaks. I like it. Indeed. Listen, I don't have any tech exposure right now. And so if I were to take a trade, the Qs make a lot of sense, right? Like, just to get a little tech exposure in case there's run. Love it. Think it's great. Hey, listen, we're pitching a perfect game in my opinion, Jake. We're in the 9th inning. There's two people out. And here you are on the pitching mound. See if you can deliver the perfect game for us on Trade Masters tonight. No pressure.
Okay. No pressure. All right. Last pick I got for the crew here is going to be Groupon.
And if you had Groupon on your scorecard at home, congratulations. I would not have guessed.
Me neither.
Yeah, something a little different. Looking on an entry above yesterday's candle, high specifically. Looking to trade a bullish trade up through, but not holding through next earnings cycle. So I was thinking just a long call, keeping it super simple, buying like 60, 65 days out, buying the $65 strike, which would be close to at the money at the time that it's breaking out. It'd be like 62, 63, slightly out of the money, and playing it that way.
All right, so why do you like Groupon? I mean, we've got lots of places we can go. I've been following Groupon lately, so this is all new analysis. Why do you like Groupon over whatever else?
I just like the volatility it had on the earnings announcement. What I saw was really
because something drew you to it, right?
That candle, that was like, ooh, that's pretty, that's different. As soon as I saw that, that was on my radar. But after that candle, I missed it. I missed my entry. I'm chasing it at that point. What I'm starting to see develop is a nice little flag type pattern, pulling back, slowly meandering, and trying to get some upside exposure to the next run. My guess is because based on the little bit of research I done, they did well during the earnings announcement, or at least everybody liked it. If that expectation is priced into the next earnings cycle, just trying to gain a little bit exposure, bullish as well as positive vega run into the next earnings cycle.
Yeah, and it's a beautiful flag pattern. Well, one of you, I don't care who, just explain the 30-second basic psychology of a flag pattern, why it works, why traders like it.
Jake, you got it.
Okay, well, what I think about as markets, and it might be a little different than other people's, is I think about it as a series of sprints. So you sprint and then you breathe, and then you sprint and then you breathe. Any type of corrective pattern, like a flag, like a triangle, like a base, to me is that breathing mark. I like flags because they aren't a huge deep retracement, right? I find that the shallower the retracement, the stronger the trend. So I like that they're typically tight, they're consolidated, they're rather clear to define, and they're an easy trade for me to take.
Listen, this has been absolutely. I don't know if you got your notes at home. I got a lot of stuff to consider tonight. The bullish action, the bull market might be on. I do know March options expire in a couple days for the monthly options. I got some risks that I need to put on the table, and you guys have given me a lot to. I mean, seriously, it's been an honor tonight hosting you. These are great picks, great analysis, great diversity in picks. I can't let the student beat the mentor on the first time they match. So Tyler, Craig, congratulations. You have won tonight.
Whoa, what? Does the chat not get involved? Do we not get a second opinion here? What's going on?
Oh, you don't know how this goes, do you? It's totally arbitrary by me at the end.
Oh, okay. All right.
But
Don't
seriously,
keep going though, Jake. Don't keep going. It was great. Just keep going. That's good.
No, that's okay. I'll take the
but
I'll run with it. But I don't think I'm gonna call a biased judge on this one personally. Tyler, I don't know what you paid him, but something happened here, guys. I'm telling you.
Listen, it's the only part I don't like about the. I want that reaction out of the losing person every week.
Whoa. Can we get a second opinion? Jake, you did good, dude. Listen, I was going to take credit either way. All right. I was going to take credit either way. So
yeah, for sure. Yeah.
Listen. Seriously, if you're new to trading, I don't know if you can appreciate the amazingness of the analysis from these two individuals tonight. If you're experienced, you definitely got it. Just great stuff. We try to put out this quality of analysis as a team at Tackle Trading every week. If you are not a pro member, sign up for that 15-day free trial. Go to the store tab at Tackle Trading and sign up for that 15-day free trial, or you can email me at team@tackletrading today. And tonight for Cash Flow Condor members, Tyler, you have your Cash Flow Condors class here in 40 minutes.
Yes, but I want to hear you say Cash Flow Condors 10 times fast.
Cash Flow Condors. Listen,
30 minutes.
The winner of tonight has not been cemented yet till the show's over. So
cry me a river.
Play
the tape. Play the tape. Okay, it's settled. We're fine.
Great.